Hello friends. So far I have discussed about the P&L appropriation account, that it is an extension of profit and loss account. Net profit that we get from profit and loss account, we will credit it to profit and loss appropriation account. Interest on drawings is credited because it is an income for the firm. Interest on capital, partner salary, commissions, that is remuneration to partners, are debited to profit and loss appropriation account. Okay, and the balance is transferred to partners, capital or the current account. Then we discussed the journal entries regarding these points, that is interest on capital. Interest on capital, being an expense for the firm, is debited and the partners' capital, because partners become our creditors, it is credited. So interest on capital to partners' capital account, and then P&L appropriation account debit to interest on capital account. If we see the net effect, it says P&L appropriation account debit to partners' capital account. Okay, then we have interest on drawings. Interest on drawings, absolute reverse of interest on capital, because interest on drawings is our income. So it will be partners capital account debit to interest on drawings account, and then interest on drawings to P&L appropriation account. Net effect is partners capital account debit to P&L appropriation account. Then we have the partner salary and commission, similar to interest on capital account. Okay, then we have transfer to reserves. It is P&L appropriation account debit to reserve account, because the partner's capital account is nowhere involved in this. We are setting some amount out of the profits for the reserves. We are not paying to the partners. Okay, then the transfer to partners account, credit balance being profit, it is P&L appropriation account debit to partners capital or current account. Okay, then I discussed about the rent paid to a partner, that it is a charge against profit, because you have to pay rent whether the firm is into profits or into losses. So it is to be debited to profit and loss account and not profit and loss appropriation account, because it is a charge against profit. So one is rent and the second is interest on partners loan. These two things are a charge against profit and not an appropriation of profit. That is, we are not distributing the profits among partners. This is an obligation to pay whether the firm is earning the profits or not. Okay, so this is debited to profit and loss account and not profit and loss appropriation account. Okay, so now we will see some practical problems on this. Based on what we have discussed so far, we will see some practical problems. Here is the first problem. It reads, Sharma and Verma were partners in a firm sharing profits in the ratio of 4:1. Okay, so I'll keep writing these facts side by side. What it reads, there are two partners, Sharma and Verma. Okay, and their profit sharing ratio is 4:1. That is, Sharma will get 4/5 and Verma will get 1/5. Their capitals on 1st April 2008 were Sharma 5 lakh and Verma 1 lakh. That means S capital is 5 lakhs and Verma's capital is 1 lakh. Okay. Next, the partnership deed provided, that means they have a partnership deed executed between them. Okay. The partnership deed provided that Sharma will get a commission of 10% of the net profit after allowing a salary of 5,000 per month to Verma. So this line is covering 2 points. One is the salary of 5,000 per month to Verma. One thing it says salary to V. It is 5,000 per month. Okay. Second thing, that Sharma will get a commission of 10% of the net profits, but these net profits are after allowing the salary to Verma. That is, first we will pay salary to Verma, and then whatever profits are left with us, on that 10% we will pay commission to Sharma. Please read the question very carefully. Each and every word is important. It says commission to S, that is 10% of what? Net profits minus salary to V. Because the question very clearly states that 10% commission is to be paid after allowing a salary of 5,000 per month to Verma. Okay. And says the profit of the firm for the year ended 31st March 2009 was 2,80,000. Prepare the profit and loss appropriation account. So it says the profit was 2,80,000. Okay, we have to prepare profit and loss appropriation account. So I have written all the facts here now. Okay. So let's prepare the profit and loss appropriation account. I'm again repeating, formats are very important in accounts, so please be careful with your formats. Okay. So what we have is here the credit side, here the debit side, we have particulars, amount, particulars, and amount. Now what it says, step number 1, first point, profit, we will say by net profit 2,80,000. Okay. Second point, interest on capital, nothing given, not to be paid. Interest on drawings, no mention, nothing to be received. Okay. Then we have interest on partners loan, nothing given, no treatment. Next we have remuneration to partners. Yes, we have it. Now in the remuneration, what we will do is, first we will pay salary to V, because after paying this salary we have to pay commission to S. It is very clearly mentioned in the question. So what we'll do is, first we will say to salary to V, 5,000 per month. So for the year it will come out to 60,000. Okay. Now we will pay commission. Okay. Now we will pay commission to Sharma on 10% of net profits minus this salary. Now what will be to commission to S? It will be 2,80,000 minus 60,000 into 10%. 2,80,000 minus 60, 220. 220, 10%, 22,000. Okay. So anything else left? Nothing. We are left with some profits to be distributed among partners. Now we will say to profits transferred to S capital account. Okay. Now what are the profits? 2,80,000 minus 60,000 minus 22,000. We are left with 1,98,000. Now what is the profit sharing ratio? Profit sharing ratio is 4:1. That is given in the partnership deed. So we will divide this 1,98,000 in the ratio of 4:1. Now what will S get? 1,98,000 into 4 divided by 5. Okay. I'll write this down below. This is 1,98,000. What will S get is 1,98,000, okay, into 4 divided by 5. Now it will get 1,58,400. And what will V get? V capital account. We will get 1/5 of it, 1,98,000 into 1 divided by 5. It will come to 39,600. Okay. So the P&L appropriation account is closed with 2,80,000. 2,80,000. Clear? This was a very simple, very basic question. Partnership deed is there, profit sharing ratio is given, capital is given. Just one thing is important, that read each and every line of a question, because now it says, because the question says that first pay salary to V, then whatever is left with the profits, on that pay commission to S. So this is a very important point of this question, because what people can do is they can pay a commission on a full net profit of 2,80,000. That is a blunder, because the question is very clearly saying that first you have to pay salary to V, and after whatever profits are left, you have to pay commission to S. Okay. So you can write this solution.